We had guidance from Telkom. It had said that results would be 25 to 45% lower. Market looked like it was penciling in 408 cents, so this would then be slightly above that expectation.
Yeah, no, it certainly was above that expectation, but having said that, still, I think rather poor results due to reasons indicated, but a bit better than the market anticipated, I think, given the forewarning.
Now, normalized headline earnings per share, normalized for what? Are they hiding something in there?
No, I think it's effectively there was a sale of interest in Vodacom, 50%, that took place over a year ago. Also, there has been write-downs in operations related to the Multilinks operation in Nigeria. So that would bring it to, I think, to a more common ground.
And of course, they've restated the previous year's numbers because of that multi-link sale, which we're still hoping to go through, because we had news last week that Helios, a private equity firm in Nigeria, busy suing Telkom because of some leasing on towers.
It's a long-term agreement that was entered into, a 10-year agreement with leasing of space for radio equipment on towers with Helios Towers, a company in Nigeria. And Telkom, once it took the decision to sell its mobile unit, presumably wanted to terminate that contract, and that would have been taken over. The infrastructure, the radio infrastructure, would have been taken over by Visa Phone, the potential buyer. But obviously Helios, I think, was counting on that revenue and is adamant to make it binding on Telkom for the full duration.
Do you see this as an additional hurdle and another risk for Telkom as it tries to pull its way out of that business in multi-links?
Certainly is a hurdle, because the sale was subject to certain conditions, and that being one of the conditions. And now Visa Phone, by latest indications, has put its offer on hold and potentially withdrawing from the deal, which means Telkom will have to go and look for a new buyer. And it did take a bit of time to find a new buyer. And even though they were not going to sell it for a considerable amount, $52 million in comparison to what they actually paid for that initially, they could have problems looking for a new potential purchase of that.
Dividend, 145 cents, that's slightly higher than last year. There was no interim dividend and no special dividend either. Do you think that's a reason we're perhaps seeing that share price pulling back a little bit today, if the results were, as we said, a little bit better than expected?
Yeah, could be one point. Another is that perhaps they are trying to make the shareholders happy, seeing how the shareholders are not benefiting much from appreciation in the share price itself, trying to keep them acquiesced by offering them a higher dividend, which is, I think, relatively high in comparison in relation to what we've heard as the results coming through.
Do you get any glimmer of hope from the results today? So you said that share price languishing at this point. Is there anything in the commentary today expected to raise that share price? So they do talk about more aggressive cost cutting going forward. They're going to attack that. They also talk about subscriber numbers at ATA. 1.2 million almost people have been recurred for the mobile units. Anything in there that's positive for you?
Well, 1.2 recurred, but it does mean that all of those are actually active SIM cards or subscribers. If you look at the numbers themselves, it's under 500,000 active subscribers indicated, so about half of that amount roughly. But it is appreciating on the slow side. It is a tough market. I think where we do look for hope and positive news in the future is Telkom's indicated that it is investing heavily in its next generation network and going to address the enterprise market segment with new services, the so-called cloud computing, network managed services, and in general bring more converged or combined services between its fixed line operations, data center operations, and also mobile operations. So that's, and it is placed in or very well placed to take advantage of that. So I think that as long as they can fulfill on that intention and strategy over the next few years, then we should see more positive negative news going forward.
And what's your view? Do you think they can fulfill and all that? They also talk about ATA breaking even at an EBITDA level by 2014, cash flow positive by 2015. Do you think they're going to live up to the expectations that they're building for themselves here?
Well, I think it's two separate markers that we need to look at. One is the mobile market, which is ATA, and it's a very competitive market, difficult market to, I think, expand into. Because we've got incumbent players such as Vodacom and MTN, which will not give up their market share easily. The other aspect, or the other part of the Telkom game, is the fixed line market moving more into IT services, data center based services, the new cloud based services, and that's where Telkom has, I think, far stronger hand in relation to other market players, or is a lot more competitive. And that's, I think, where we're looking for more positive news. ATA being, hopefully, if it does manage to perform well on the market, being a sweetener on top of that.
Of course, the local loop unbundling is also looming for Telkom, and that's going to take away some of its competitiveness in the marketplace. Do you see this as another big deterrent to the group?
It certainly is a challenge, I think, going forward. Not sure it will happen this year. The indication is perhaps we won't see local loop unbundling in 2011, but we probably will see some form of local loop unbundling, one of its forms, over the next 2 years or so. And yes, it is a challenge, because it effectively means more competition right on Telkom's access network. It will lose its monopoly in the access infrastructure, or close to monopoly in the fixed line space. Neotel has some of its own infrastructure rolled out by now as well, although that's fiber optic and wireless, and effectively allowing more competitors directly onto its network and selling network capacity rather than structured products to those service providers at a lower cost.